Greetings, my YouTube family. Thank you so much for being part of this journey. Today, I'm going to talk about how to manage cash flows. One of the things that really struck me was when I was talking to my friend Ali. Ali, shout out to you. Thank you so much. We were talking about this model and just reminiscing how we can possibly move from, poor cash flow management to much better cash flow way of managing things like what wealth people do. Generally, to give you a picture, imagine, let's say I have, income that is, coming from a minimum wage job, and I'm not saying it's something that is bad, right? And I have, a bit of welfare from the government. Let's say I'm in Canada, like my case. And what usually happens in that case, I get the money and the government takes their tax, and that money comes in. As fast as it comes, it pays for the living expenses, which may include rent, and other things like gas and food, right? And as soon as it comes, it goes out without even building assets. And let's say now I go to school, I pursue a master's degree, and then I get, a very specialized skill. And at that point now, I can then get a good job that pays me a decent income, let's say 100,000 per year. But now, if I'm not careful and I increase my liabilities, because now I will have access to loans and other things like credit card. So what usually happens is the income comes, it's, a 5-figure salary, but also maybe if I have a business at the same time. But if I then say, okay, I'm going to get into a mortgage, I can then, get bank loans and credit cards. It's going to wipe out, or the potential income generating capacity. So what I would be inclined to do in that case would be, if I get into a mortgage, for example, I get into a mortgage that I can afford, that doesn't take at most 30% of my gross income. So what that means is that I can have that property, the money comes, it pays the mortgage, but at least if I have an affordable mortgage, it can possibly or potentially appreciate in due course, right? Which is good. But now, if I have credit cards and I inflate my lifestyle, it means I'm most likely going to stay in that bracket. Now, if I then can leverage on this income that I have and start to consistently invest in the stock market, right, and get into property, real estate, right, and also bonds, write books, create YouTube, and create, intellectual property and other income streams, multiple income streams. What that means is my assets now, in this case, in terms of my net worth, it will be different, right? I would then be looking at, income that is not coming from the job, right? I could then get, dividend income and interest from investments, business income, residual income, and also rental income and royalties, which is different because I'm not actively, in this case, involved in the making process of the money. If you invest, you get the dividends every quarter, every 3 months, in a year, you get, that income. So what that means, like what most wealth people do is, I could then possibly take residual of that income, that surplus income, and reinvest it into the assets again to grow that pie. But notice that my liabilities, in this case, I don't increase them. If I borrow money from the bank, I would do so, but I would do so in a manner that I would get a positive return and then increase my assets and have the bank money, multiply and give me or build wealth through, let's say, real estate. It seems easy in theory, but I think over time is something that is doable. So I thought I would just share with you that discussion that I had with my friend. Of course, he is okay with that, and I just found it very interesting that one way to get out of poverty is to think of ways that I can leverage on income streams, be it focusing on my knowledge and starting a YouTube channel, for example, but also doing a job that can take advantage of my skills and I get income that is quite high, and then get to a point where I stop trading my time for an hourly rate of money. I then have money actively coming from different investments that I will have And that's it for this week. Thank you so much. I'm going to be uploading the video for investing in ETFs, SOQQ, part 1 and part 2. So stay tuned, and thank you for being part of this journey. Have a wonderful